I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology because no one likes to lose money. It's more painful to lose a dollar than to gain, than the joy of gaining a dollar. But what we did was we took a step back and said, you know, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy, and that was our advice to clients.
In today's analysis, we're exploring a crucial and nuanced perspective from Tom Lee on the current state of the digital asset market. Drawing a powerful parallel to the early infrastructure-heavy days of the wireless and AI industries, he argues we are still in the very early innings of a multi-decade technological revolution. Just as the iPhone emerged 15 years into the wireless build-out, the truly transformative applications of AI are yet to come. This long-term structural bull case provides the context for his more critical, near-term assessment of the crypto market, where he sees a clear distinction between the enduring technological promise and a specific area of unsustainable market froth.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
We get more criticism than positive feedback to any of our views. I mean, if someone follows us on social media like Twitter, or if you look at the comments on our YouTube clips, or even sometimes unrequested inbound emails to our firm, usually it's criticism.
Yeah, it's amazing what people can do when it's anonymous, right? And they write in whatever. But those people, you've been right. I mean, you've been bullish, you've stayed long, you've stayed strong. What are you seeing maybe that some others are missing? I don't know.
Well, I think too many people are tied to their own biases. So like when markets were falling in February to April, then in their own portfolios, they were suffering damage. And as you know, that gets into people's sort of psychology because no one likes to lose money. It's more painful to lose a dollar than to gain, than the joy of gaining a dollar. But what we did was we took a step back and said, you know, with all the forces at work, are we really going to drive the economy off a cliff? And if the answer was no, then we know that at those points of fear, that's when, as hard as it is to do, is you either have to hold on or buy, and that was our advice to clients.
Yeah, and is there anything that you see in your research, Tom, that would imply that this momentum trade, if it is indeed a momentum trade, is going to end anytime soon?
We don't. We you know, for instance, if we take AI as a thought, and we, let's say, overlay something like the exponential growth of the wireless industry, that was a 20-year period when the number of users went from 37 million subscribers to 7 billion. You know, we don't have 7 billion ChatGPT users, and we don't have 7 billion robots. So I think if not yet, that's right. And so if someone's trying to ring the bell at the top for AI, they're underestimating how quickly penetration grows. We're probably in the first quarter or first third of that cycle for AI.
Okay, if I had to take the other side of that trade, and who am I, but is that people are spending a lot of money on AI, the Metas of the world, the XAIs, the Googles, they're buying a bunch of NVIDIA chips, they're building out power data centers, and all that's inflating the market. Are companies making any money from AI? They're spending a lot, but are they making any?
That's a great question. And
because if they're not, maybe they stop spending so much.
Well, I think that when you look at the early builds of any new wave, and I think wireless is a good example, first is the infrastructure that gets laid. So that's the LLMs and the data centers. And then what happens is you have critical mass, and so then the application layer starts to emerge. That's exactly what happened with wireless. And then that's when, not until 2007, that the iPhone came along, 15 years into that cycle. So I
was thinking more like Global Crossing-ish.
Yes.
Right? Somebody paid, and if you're really young, Global Crossing was a company that spent billions and billions and billions of dollars laying actual physical cable around the oceans, the world, to which eventually Global Crossing went bankrupt. But those cables are still being used today. Thank God.
Yeah, all that fiber.
They spent that money to do that, even though it sort of cost them the corporate entity. You're not seeing any of that now.
That's right. And in the Global Crossing case, the second owner of the hotel made a lot of money.
Yeah, second owner.
So I think that we're now at the phase where we're going to be thinking about things of like security around AI, you know, proof of human or whatever. And we're going to see companies leverage AI like the JP Morgans and the Goldmans. So there's another wave of opportunity coming where it's exactly what you're saying. We got to the point where AI is good enough that companies can really now actually improve their business strategy. So I think there's still a lot of positive to come.
I'll give you an opinion on both sides. One side, you've got the fixed income market that's been 40 years running only up, that's now turning down. That market's rolling over. The 60-40 portfolio, as we know it, might be dead. Bonds are 5 straight years of red, of losses. And so you need to find ways to capitalize yourself. If it isn't dollars, if it isn't treasuries, if it isn't an index of stocks, Bitcoin and assets like gold are maturing as a neutral reserve asset that you can capitalize yourself on. So I think more and more companies, governments, sovereigns, endowments, individuals will begin to capitalize on Bitcoin. Now, to take the other side of, is this market frothy? I think it is, right? What we've learned is creating a Bitcoin Treasury company is not a scarcity within itself. Anybody can register a business, attempt to go public, and try and raise money to buy Bitcoin. What we believe at 21, again, is the success is going to lie within the ability to attract massive swaths of capital and actually build a business on top of this opportunity that generates cash flow and has customers and is contributing real world market value to the end consumer. That's at least our opinion, and we think that's a far more scarcity than your 20th Treasury company.
Last time you were on our program, you gave this idea, and it kind of went viral on X after we spoke, but it was this idea of existing and being paid to exist through cryptocurrency. The idea that, you sitting there at work all day long, you're not necessarily being compensated for what you're doing, and you see crypto as being a solution to that. I got to be honest with you, I didn't quite get it.
Okay.
I want you to paint that picture for me and get me on board.
Yeah, well, so first of all, I think it's Bitcoin, not crypto. You know that. But just to clarify for the audience, it's Bitcoin specific.
Well, that's just your view that Bitcoin is the crypto that you're focused on.
Yeah, but I think Bitcoin is the money within the crypto sphere.
Okay.
And the point really here is this, Tim. Every single day, you make a decision on how to get compensated for your time, your energy, your effort, your labor. I'm watching you. I'm sitting in the behind the scenes. I'm watching you haul your butt. You're doing a great job on this show. You need to somehow capture the value you're creating for all of us here. And you need to somehow save that value so that tomorrow you can pay rent, you can get groceries, you can travel home and see your parents.
But that comes every 2 weeks in the form of a paycheck to me.
Right, but what the
Bloomberg sees the value in that. They hired me.
Correct, so you're going to get a paycheck in the form of dollars, but those dollars are losing value in the things that you need in your life, anywhere between 2 and 20%. Depends on what you want. You want a Caesar salad, 2%. You want a nice house, 20%. And so you need to find a way to persist and save and store that wealth. And you make a decision every single day, whether you know it or not. Unfortunately, because the dollar is being debased, everyone is a speculator here filming and watching us. And so you have to make that decision. And in my opinion, over the last 15 years, and it will continue to be so, Bitcoin is the best place to do that. Take the wealth you're creating today, bring it with you tomorrow.
The core of Lee's analytical critique is aimed squarely at the burgeoning Bitcoin Treasury company model. While he firmly believes that individuals, corporations, and sovereigns will increasingly capitalize themselves on Bitcoin as a neutral reserve asset to escape the dying 60-40 portfolio, he delivers a stark warning. The market for pure treasury plays has become frothy. He argues that simply registering a business to raise capital and buy Bitcoin is no longer a scarce or defensible strategy. The true sustainable success will not come from the 20th company to execute this playbook, but from those who use their balance sheet as a foundation to build real, cash flow generating operating businesses with actual customers and a tangible contribution to the ecosystem.
Bitcoin's a $500 trillion asset in the making. These other technologies and crypto coins are maybe going to replace an Amazon. And so we think the focus on Bitcoin financial services and not getting diluted our focus through all these other speculative vehicles. And then for strategy is the founder of this Bitcoin Treasury idea, which is an incredible business, and Michael Saylor's been able to prove that, but they have yet to explore the idea of bolting on an operating company on top of that and using capital markets and their balance sheet to monetize this Bitcoin trend. We think we can live in the intersection of those with my experience at Strike, Tether's experience running stablecoins and USDT, SoftBank, our access to capital there. We think we can do both and blend those worlds into what will be a very unique Bitcoin vehicle in the capital markets.
How do you know this is a problem that needs to be solved? What evidence do you have that this is a hole that needs to be filled?
Because my partners and co-founders made about $5 billion of net profit in Q2. That is Tether. And they hold Bitcoin on the balance sheet. They support a lot of Bitcoin adjacent businesses like mining, like lending, like brokerage services. And I myself at Strike, we just had our largest quarter ever. We're one of the biggest financial services firms in the world when it comes to Bitcoin. So I don't know of two better experts to lead the Bitcoin train in the capital markets than us. So the experience comes with our resume. Nothing I can disclose on this show. I'll be back whenever I can. I'll tell you all about it. No, we've raised a ton of money. We've brought on SoftBank as a minority but significant partner who will join us on the board. So we have sovereign-esque capital. We have the largest crypto business in the world, cash flow, stablecoins, and Tether. We've built a tremendous leadership team. And as I've talked about on the show, we do plan to launch a business. What I would say to you, Tim, is I don't know if we consider ourselves a Bitcoin Treasury company.
Why not?
We have a Bitcoin Treasury business.
Okay.
We go out, we've already raised a convertible bond, very accretive terms to our shareholders. We've been able to acquire Bitcoin in a phenomenal way. So that's our Bitcoin Treasury business. We're going to raise capital, buy Bitcoin accretively. We also are going to build products. We plan to have cash flow. And so as a Bitcoin Treasury company, our sole purpose is not solely to accretively raise capital to acquire Bitcoin. It's also to contribute to Bitcoin's story through technology, through products, have customers, have cash flow. And we think that makes us materially different than a lot of the other, maybe dozens of businesses. Who knows their plans, but I want to be concretely clear that we see ourselves, again, are we competing with a Coinbase? Are we competing with a strategy? We think, why not both? We're capable of both of those. And so I don't know if I agree with the categorical marketing term of treasury company for 21.
What would you call yourself then?
A Bitcoin company. We want to be the best Bitcoin company in the world.
Ultimately, Lee's vision is for the evolution from a simple Bitcoin treasury company to what he calls a true Bitcoin company. This new model, which he is directly involved in, aims to live at the intersection of two worlds. It will leverage capital markets to accretively acquire Bitcoin for its treasury, but it will also build financial service products on top of that foundation. He believes this is a materially different and superior approach. The goal is not just to be a passive holder of the asset, but to actively contribute to the Bitcoin story through technology and products, competing with both pure-play treasuries like MicroStrategy and financial service giants like Coinbase, creating a unique, hybrid vehicle that captures value from every layer of the Bitcoin revolution.